Before we break for lunch, and I know some of you are already thinking about it, we have one more session that's well worth your attention. When it comes to building scalable tech, timing is everything. And in this industry, building slow often means falling up behind. Moderating this discussion is Cristian Vlasceanu, CEO of Centroid Solutions. Let's welcome Cristian and his panelists to the stage.
Hello, everyone. Thank you for joining us. Are you able to hear me fine? Yes. Perfect. So thank you for making the time to join us in today's panel discussion. Today, we're going to talk about technology and trading infrastructure. We're going to talk about performance, uptime, scalability, also innovation, and of course, what it takes to stay ahead of the game. As we know, when it comes to our industry, everything is fast-paced. If you are not moving at the right speed, you fall behind. And this is most prevailing when it comes to the technology that is purposely built for our industry, right? So in order to discuss this, we have assembled a panel of industry experts in order to have an open discussion and also share their insights. I guess we'll start with a quick round of introductions. I'll first say a little bit about me and my company. So I'm Cristian Vlasceanu. I'm the CEO of Centroid Solutions. I've spent my entire career in this industry. On the technology side, I've led a few firms offering technology solutions for broker-dealers and other financial institutions. And at Centroid Solutions, we specialize on core technology and infrastructure solutions for brokers. We have a bridging and connectivity engine, a risk management system with complex analytics, and also infrastructure purposely built to run optimally the setups of our customers. So now over to my fellow panelists. Please, we can go in order, I guess. So Enrico.
Hello, my name is Enrico, and I am Growth Director at TradingView, which is a social network for traders and a trading platform. So let's go ahead.
Yeah. Hello, everyone. My name is Fivos Georgiades. I'm Executive Director for Easy Markets in Cyprus. Have around 15 years of experience in the market. Maybe some of you know me from my tenure at Accounts.
Hi everyone, my name is Alexey, and I'm building a trading platform which is called takeprofit.com. Easy name to remember. We are pretty new in the market, but the platform has been developed for last 3 years. It launched less than 1 year ago, and it's a trading platform focused mostly on intraday traders. We can call them sophisticated traders and algorithmic traders. And it also roll-in-one with community. We have a marketplace for scripts, algorithms. Users have their social profiles in the platform. So that's what I'm building.
Thank you. Thank you, guys. All right, so then we'll go right in, just mindful of the time. We have here representatives, as you can see, from different aspects of our industry. And given the recent events and the volatility that we have seen, I would like to start with Fivos. Maybe you can give us a quick overview of how do you ensure that your technology that you're using is basically able to deal with the high volumes, high volatility, and the performance needed for that?
Well, from my experience, I know how execution speed and market resilience can impact trader confidence and market competitiveness. Mm-hmm. Having a high performance technology stack is really fundamental in our industry. At Easy Market, we take a hybrid approach to technology. We combine in-house technology and third-party integrations. Our goal is always to ensure low latency and maintain platform stability. Our firm already caters to some of the highest flows in the industry, and we are confident that with the right mix of people, experience, and technology, we can even cater to more flows with the right product set. I believe our tech style basically is agile enough already to evolve with market demands without sacrificing reliability.
Good. Perfect. And Alex, you mentioned that the technology that you're building is actually catering for sophisticated traders. So how do you ensure that it performs and it can scale accordingly?
there are some stuff that everybody knows and it's pretty boring, like microservices, design infrastructure, distributed by geo infrastructure, active system building, when you have zero fault system, testing, monitoring. It's all of us know, and it's pretty boring but interesting what we've done. Entering the market when it's a large market and a lot of players there, we decided to leverage being a startup through technologies, and we made a risky bet on technologies which I believe quite difficult for corporates, and we built our charting solution in browser on WebGL, and I believe it's a small number of charts who use this technology. We have WebAssembly both on our backend and front-end system, which provide impressive performance for this type of traders, for intraday scenarios and algorithmic traders, because users can create their own custom scripts on the platform, and they have to sandbox it. And it's better to sandbox using WebAssembly because it consumes less memory, and it's great in terms of performance, and you can run both on the backend and front-end. And then it can be easily calculated, for example, when it's high volatility situation, when the market open and users open charts, they start listing changing tickers and indicators, and in such high-load scenarios, and it's worked pretty well. So that's our main advantage and our main bet on new technologies.
It's very interesting that you touched upon, and I share this belief, because what I think it's important for everyone to understand is that the software and the infrastructure are very closely intertwined with each other. So you can have the best software running on the latest technology, but if the infrastructure where you are deploying it is not in the right location and rightly optimized, then it's still not going to perform optimally. So it's very important to tackle both together, like you said. Perfect. And I guess another challenge that I'm also seeing from our side, which is also very rewarding, is that, of course, our customers always want to add more and more features and functionalities for the systems to continuously evolve. But what I think it's important is to always make sure that when you're building and adding new features, you don't sacrifice the performance, the stability, the robustness of the setup. So we look at this very closely in every request that we are getting, and to see how exactly to build it in order to not affect the core of the systems. Yeah. So very interesting points. Good. Okay. Let's move on. Then I guess what's also important, I would like to also touch upon regarding the resilience, the uptime of platforms and systems in general. So especially in volatile and unstable markets, what can be done to ensure that systems are always up and stable, and also the whole ecosystem is resilient? So maybe Fivos will again start with you on this one.
Market volatility is a challenge for all brokers, right? Traders manage to prioritize latency, resilience, and uptime, can really maintain the trader confidence and remain competitive. And in markets, our resilience strategy is based on redundancy, monitoring, and scaling. We implement failover mechanisms and multi-region mechanisms in order to ensure uptime during extreme market conditions. Our commitment to low latency execution allows traders to react instantly in fast-moving markets, protecting them from slippage and inefficient order processing. Basically, I believe that brokers need to add resilience in every layer of their infrastructure to be able to compete and see the future, with...
Yeah, 100%. I think that when it comes to the resilience and stability of the system, since we deal in financial markets where every millisecond is important and continuity, is very important, I think this has been the norm since a long time now.
Yeah.
What I see nowadays is that the complexity of such systems just gets bigger and bigger, because nowadays it's very common for brokers to have a setup, an infrastructure that covers multiple trading platforms, multiple systems, multiple customer onboarding endpoints, trading counterparties, and so on. Yeah. So I think that the challenge is getting greater of how to have all these systems that might be developed by different entities come together and work in a resilient manner. So maybe Alex, have you taken this into account in the solution, in the platform that you are building?
Yeah, the same. Some basic stuff like design, the whole architecture, stress tests for the system, horizontal distribution of the system. But what we've done in order to provide service for such type of traders, we do not rely on third-party systems, and we're trying to cut them out with third-party systems, because in the beginning, when we started, we had market data providers with some sort of aggregators, for example, for crypto exchanges like EXPO, Coin API. And usually when you have a third-party provider, you cannot manage those systems, and it can be a point of failure. And it's an issue for this time-sensitive environment for traders operating with some downtime. And we build direct connection to crypto exchanges, and we already have close to 100 crypto exchanges connected to the platform, and it's mostly direct connections. And for the third-party system, if we have to rely on third-party provider, we usually have an additional one in order to have some backup if something will be happen with third-party providers. So in these scenarios, it's worked pretty well, and we have short amount of time for the last month. Usually it's operational pretty well.
Understood. So also, Fivos, you touched upon basically a very interesting point that the quality of service and infrastructure is very important for basically the reputation in the market and so on. So that was a very good point. So I want to pass it to Enrico. On this point, how can you still make sure that the infrastructure decisions that you're taking when building such an ecosystem still drives the key metrics basically that are important, such as maybe customer retention, reputation, and growth, of course?
I mean, I think I can answer this by framing it on, let's say, the broker's perspective after they have maybe integrated one of our services or one of our products. Because we see sometimes that these clients will maybe deliver the integration to the users, which is of course great, fine, but they will not then support the integration with additional activities that are really key to increase retention and acquisitions. Essentially, what we have done to help them with the setups is creating a dedicated team inside our company that has the sole purpose of helping them set up the content, the activities that are needed in order to keep users informed. And I mean, when it comes to retention, your clients should be aware. So maybe newsletters, social media content, that's what we expect. Having material that can help them learn how to use the platform. But then, of course, with acquisition, it's important to have external campaigns going on, and making people aware is an essential part to ensure that these metrics are met and are satisfy the customer demand and the client expectation, especially. So that's what we have created on our side in order to make sure that each client can deliver the service and keep also the users informed and up to date.
Understood. Very interesting. This brings me to the point of a lot of complexity as well. And of course, the topic of the panel today is also about innovation and staying ahead. So how can and this is a question for everyone, of course, how can companies still continue to innovate with this complexity without actually breaking the basics of what works already? So maybe Fivos will come back to you.
Yeah, absolutely. At DC Markets, we believe that the key here is strategic innovation rather than reckless disruption. Yeah. For us, innovation is about identifying the right features that really will enhance the trader confidence without affecting important functionalities. A platform must balance innovative improvements and proven reliability at the end of the day. And at DC Market, as we introduce new products, such as we did lately with dynamic leverage, we always test new features rigorously in controlled environments before rollout, because we really have to. You cannot, take chances. Basically, what I would say is that the biggest risk here is not whether a platform should innovate, but how it should innovate. And at DC Markets, we understand that innovation should enhance stability and not threaten it in any way.
Not just innovation for the sake of innovating, let's say. Right. And that's very interesting. What I've seen, let's say, firsthand is when it comes to building systems that must fulfill a lot of requirements and continue to evolve, what is important, and okay, it's easier said than done, is to make sure that the core, the structure of the system is very strong. Then this allows it for later on to just add a lot more features and functionalities without having to go back and disrupt the core of the system. So this makes it then much more easier to scale and implement many more, features on top. And another thing that I've noticed is basically sometimes you're not able to implement everything and do everything. So it's important to also make sure that your systems are very much API enabled. Like this, not everything must depend then on you. If you have external APIs, others can build functionality on top of that. We see this actually with a number of our products. For example, in our bridge engine, we see that customers are able to pull data from the systems and also send commands back to the system via a REST API. And this allows them to use this to a great extent and build their own logic, their own features that we're not even privy to. We don't know exactly what is going on, but we see the impact of that in their business, of course. And to the point about not breaking what works, since it's an external module, there is nothing that can influence the main system, right? So maybe Alex, what approach are you taking?
Fortunately, we have an amazing opportunity being a startup because we are building our infrastructure or system from the scratch. And if we were a large company already a long time on the market, we will have a trade-off between breaking something or deliver innovation slow. And usually large companies, they have this trade-off, and it's difficult to innovate. From our perspective, building everything from the ground, we can create this fast, and we can do some risky bets as we discussed on new technologies. And for us, fortunately, that's an advantage and opportunity that we have on the market, entering into the market, being a new company.
Indeed. Well, this actually brings me to one of my favorite topics, let's say, that always comes in the discussion, at least as of late. It's always the question about build versus buy, let's say. So what do you think that nowadays firms should do? Should they go for off-the-shelf products readily available, or should they build their own technology in-house that maybe suits their needs? So I think we can have a good discussion on this. So maybe I'll come to you, Enrico, to start with this.
I think that most of us will converge on answering this by saying that a compromise between having proprietary technology and third-party technology is the answer. I mean, no company can build everything on its own, and especially when it comes to not the core competencies. Like you have your core competency, what sets you apart, and then you have other ancillary things that are needed in order to bring your product to the market. And so you have to rely on third parties to do that. Like at TradingView, why would we build a payment infrastructure? We can rely on companies that do only that and do it very well. And by the same token, when it comes to brokerages, like why would you spend effort, money in developing the charging element when there are companies like us that only do that and that have spent millions and 10 plus years in hiring, research, development, and do just one thing but do it very well. And so I think it's in the compromise between the two aspects of third party versus first party that lies the answer, especially from our perspective at least.
Well, yeah, that makes sense. And I mean, I would venture to say that when it comes to products that are already out there for quite some time, they are not only proven, tried and tested, but also they have the potential of being very popular, such as your charting, right?
Yeah, of course, a brand can be leveraged by clients. And so, yeah, I agree, and that's true.
Good. Perfect. Fivos, over to you.
Yes, I also agree with this approach. I mean, for us, such a decision is based on a balancing act between agility, security, and scalability. Yeah. We understand that in-house technology allows greater control in stuff like execution, compliance, and security. But on the other hand, third-party integrations can really enhance things like connectivity, liquidity, and even risk management capabilities, as you know. Our approach at DC Market, of course, is hybrid. We are adding external integrations, but they need to align always with our performance benchmarks, our compliance expectations, and security standards in order to be able to adapt. I believe that finding the right balance between the two is really critical. And Cristian, I know that we are using some of your technology, so thank you, and please keep up the good work.
Thank you very much. Yeah, perfect. Well, I'm to this point, and thank you for mentioning that. Of course, I have my own view that is subjective, obviously. At the end of the day, I'm a provider for the industry, but I think what's important is that, and you mentioned this as well, that different entities specialize in different things, right? That's their focus, and they do it well. So what I also believe that the key is to find that right balance and focus as a broker or as a financial entity to focus on what gives you the biggest upside, let's say, such as what is unique, how it makes you stand out, I would say.
Yeah, I mean, you need to
and bring value, exactly, without necessarily having to, let's say, reinvent the wheel, right?
Exactly.
And such a process to build everything in-house, while it might be a decision based on control, security, and so on, I think, well, first of all, it's easier said than done.
Yes.
It slows down time to market greatly, I would say. And building anything, it's not a one-time thing. After you have built it, you need to maintain it continuously in order to not then fall behind.
And it's also a development cost issue, right? I mean, you guys take all the pain in doing some things that we cannot afford to do that. We don't even have the time for it, so.
That's right, yeah. And at some point, it's also why focus on reinventing the wheel, right? Where you can focus your attention on those key metrics that drive the business forward and so on and so forth. Yeah.
Especially for specialized technologies, yeah, I agree with you.
Right. Alex, what's your view on things?
I absolutely agree with you that it's about balance, and each company should find their own balance regarding do they need to take third-party solution or not. In our platform, as we focused on intraday and algorithmic traders, And that's the most demandful traders and the most underserved on the markets. I think it's not possible to meet their expectations and their demand with third-party solution. And for me, of course, it will be better to create the platform within 6 months, taking TradingView charging library, some other stuff, and to build the platform. And in these scenarios, it will be quite limited, and you cannot meet the demand of this audience. But it's slower time to market, and we spent years in order to build our whole system.
Bigger investment as well.
Yeah, but fortunately, they cannot provide. They have full control over these components. The same is regarding the stability of the system. When you have control of it, it's more stable. But you can provide more additional features, and you provide the tools that they requested. So the platform will be evolved and meeting more their request, which couldn't be possible with third-party solutions. But that's specifically our use case, because we understand the user's needs, what they ask, what they request, and to bring to them such type of solution, we had to build our own in-house system.
Understood. I think this is a great point. I wanted to emphasize on it as well, that whereas, of course, providers are focusing on specific things, they always rely on their customers for understanding the business requirements. This is something that sometimes we also find quite challenging, and we need to have very good communication with our customers in order to really understand their pain points and the requirements that they have also from their customers, the traders, and then build them into features. So I think one good aspect of considering to build some things in-house is that you have that direct connectivity to the actual traders, the users, but through good communication, I think that can be, of course, passed on to providers like us, and that's how we have been building our systems. Perfect. Well, I'm looking at the time. I think we have just maybe a couple of minutes, so maybe it's a good idea to turn it over to the audience and see if there are any questions. So please raise your hand and the microphone will come to you.
Hello, can you hear me?
Nice.
Yeah.
So my question is more focused on the timing of innovation. Based on your experience in the industry, how do you decide when to accelerate innovation or take risks? And do you factor in where we are in the business cycle when making those decisions?
Very good question. Who would like to answer this one first?
I'm not sure how to answer that.
Can you please repeat the question? I do not heard the whole question. Have you heard it?
Right. So
Yeah.
If I understood correct, yeah. Okay, he will repeat it.
Hit it again, sorry. So it's more about the timing of innovation, right? Like when you decide to innovate or say, okay, we're taking a decision right now to innovate. Do you take into consideration the business cycle? And if so, when do you take those risks?
Yeah, from our perspective, as we are a startup, that's we need to find an advantage how we will grow in this market and how to enter this market. And for us, it was only one solution or decision to innovate, to build the system on a new technology, and to take this risk. As we are not a long-standing player on the market, such a corporate, and from startup perspective, it's definitely you have to innovate, and you have to rely on something new to have this advantage, leverage point to compete with the current market.
I mean, it's key to have a quick feedback cycle with customers you're offering your services to. So having maybe a small, I think that the discussion may be like, are you innovating Apple way? Like you wait until technology is proven to be like effective, or are you anticipating that trend and trying to, let's say, anticipated the AI cycle that can be. But in general, I think that having this sort of close connection to the users, maybe having small percentages of users testing out new features allows you to have a quick loop that can eventually lead to a better product while avoiding disrupting the experience for everyone. So for us, it's about having small groups of people that can test the features and can respond quite quickly and let us understand if something is going into the right direction or the wrong direction. So that's our take.
Understood.
I agree also. Innovation is about reliability. So it doesn't matter how good it looks like or how many people have it. Unless we make sure that it's reliable, we will hesitate to go into.
From the perspective of, let's say, an established provider with a large customer base, when it comes to innovation, there's always, let's say, there are a few parts from where it's also coming. Some are just direct requests from your customers, while others, you need to take a step back and see what makes sense to do next. What's the next step, in the journey of the technology? And some of these usually actually conflict with each other, because in terms of cycles and development pipeline, you might be very busy having to service direct requirements from your customers, while you want to dedicate time to build the next thing that you think is going to impact, make a big impact in the market. So it really depends. Sometimes it's a juggling act, right? And it's great when the two of them come together, that actually your customer requirements make for that innovation in itself. So I hope we managed to answer your question. I guess that's all the time we had for today. Thank you once again for your time, and please give a strong round of applause for the panelists. Thank you, guys.
Thank you.